Hi, I'm Jimmy. In this video, I'm going to walk quickly through my personal investment portfolio and how I'm trying to expand that investment portfolio. Plus, I want to answer some questions that I've received about how I'm going about building what is ultimately a relatively new investment portfolio. Okay, so let's jump right in. So a while back, I did a video where I walked through where I first introduced my investment portfolio, and I gave a bit of backstory as to how my portfolio came about. And here's a quick summary of how I started the investment portfolio. So basically, a couple of years ago, I launched my own independent investment research company. And in launching that investment research company, well, my wife and I needed to put any and all money, all savings, all investments we had into that company, try to manage the company and get it to survive in the early years when we're not profitable. So going into 2020, well, I didn't own any stocks at all, except of course, my ownership in the company, but not publicly traded stocks. And I really wanted to get back into the stock market, although at that time, many stocks seemed overvalued. So heading into 2020 was really the start of my personal investment portfolio. So my first purchase in 2020 was Disney. So I had done a video back in February of 2020 on Disney. And at that time, this is what the stock chart looked like. Now in that video, and ultimately my analysis of Disney was using discounted free cash flow, well, I came up with a fair value for Disney stock of just $102 per share. And as we could see, it was about $140 at the time, so it was a long ways off. Now, personally, I try to remain patient and buy stocks that appear to be undervalued. So I didn't jump in and buy Disney right away. But then, as we know, the coronavirus hit and the economy took a nosedive, and so did Disney stock, heading below, ultimately almost down. I think it was slightly below $90. Well, I had itchy trigger fingers back then. As soon as it dropped below 100, I jumped in and started buying any and all shares I could of Disney. So after that purchase, well, Disney represented 100% of my stock portfolio. Now, the good news is that since that time, Disney has done quite well. My average cost was about $99.86. So I'm up about 85% as of the other day. I'm up about 85%, so I'm thrilled with what Disney has done. But let's face it, with 100% of my portfolio in one stock, some might say that is not diversified enough. And I knew that. So I kept looking for new investments. And a couple months later, after a video I had done on Intel, well, once again, I thought that Intel looked like a good opportunity. And this actually brings me to another quick point. So many people who have been following this channel know that I have a self-imposed rule where I won't buy a stock unless I first make a video about that stock. Then once I make a video, well, I wait a few days so everybody can do their own research and see if they in fact like it. And then I'll jump in and buy it after a few days after a video gets published. So to me, this seems like the morally responsible way of investing. And with that being said, well, one thing that I've never talked about is my process for selling a stock. And I really haven't had to talk about that since I know the stocks that I'm buying, I'm planning on holding for a very long time. But just so we all know, I have every intention of making a video before I close out a position where I explain my reasoning and why I'm getting out of that particular position. And just like I do when I buy a stock, I plan on waiting a few days after I release the video so people can do their own research before I sell the stock. Except when it's a stock that I did not buy. So, in the description of many of my videos, I have an affiliate link to Robinhood. By the way, Robinhood is the brokerage account that I've been using as I'm building my investment portfolio. So I have an affiliate link in the description below and in many of the videos that I do. Now, I've never talked about it before, but the way it works is ultimately if you click on that link, and you download Robinhood and you set up an account and all of that stuff, well, I get a free stock and you get a free stock. I have found that those stocks tend to be worth in the $4 to $5 range. I've gotten a couple of those, especially over last year. I got a few of them. Well, pretty much my reaction is when I get one, that's great, and I appreciate you guys using the affiliate link, but when I do, I normally just sell the stock a few days later and save that cash for when I find a good investment opportunity that I personally picked up. So clearly, a hard definition of the rule would say that I should make a video on that first, but I think that's a reasonable exception to this rule. So if I get a free stock that I have no interest in or I know very little about, I will sell it. If I considered keeping the stock, I will then do a video on it. I did that for Ford. I had actually gotten a share of Ford, and I'd done an analysis on Ford saying, hey, is it worth it to keep it? I ultimately decided not to keep it, sold the stock, and I'm not even sure what Ford is doing these days. But if I decide to keep it and add it to my portfolio, well, I will in fact do a video on it at that point. Okay, so with those self-imposed rules in place, let's jump on to my next purchase. So at the end of July of 2020, I did a video on Intel. And I did another video at the end of October. And after those videos, I ended up buying some shares of Intel and got an average price of $45.65. But Intel also pays a dividend. And since these are long-term investments, well, I don't really need those dividends at this point. So what I've been doing is setting up a DRIP program. DRIP is short for Dividend Reinvestment Plan. So the company pays a dividend. On the X date, it automatically goes in and buys, or once I suppose on the pay date, once the pay date happens and you get the money, the brokerage account automatically reinvests that money into the stock. And because Intel stock has gone slightly higher, well, my average price has gone up a bit to $45.74. And that's because in the first quarter of this year, well, Intel paid a dividend and that dividend got automatically reinvested. So you get a slight adjustment higher in your average cost. Now, had Intel dropped in value, the dividend reinvestment would have lowered my average entry price. And once again, given where Intel's stock is today, well, I'm up about 28%, so not too bad. Okay, now coming out of the Intel purchase, well, I had just 2 stocks in my portfolio, and with Intel representing about 60% of the overall portfolio. And Intel was only a bigger position because I happened to be able to put aside a little bit more cash leading up to the Intel opportunity. So when Intel came around, I had a bit more cash than I had when Disney came around. So the fact that Intel was bigger was a coincidence, not a plan. And that brings us to my most recent purchase. So about 2 weeks ago, I did a video on Lockheed Martin. And I was impressed with the company and the sustainability of their revenue and their profits. So in that video, I said that I wanted to buy that stock. But as per our previously mentioned rule, well, I would wait a few days before I would jump in and buy it. I did just that. I waited until Friday to go ahead and buy my shares. And I'd released a video on, I believe it was the Saturday before that, so it was almost a full week. Now, I've been asked a few times if I spread out the cash that I invest in a bunch of different investments or just a single investment. And I've personally done it where when I get cash and I find a good investment, I put it all in it all at once. And for me, that makes sense with the way I'm constructing my personal investment portfolio. Now, if for some reason I came into some money, let's pretend one of us we got $50,000. Well, if we got $50,000 all at once, I would be unlikely to put it in one position. In that case, I would decide, maybe you're doing $5,000 a position or $2,500 a position or $1,000 a position. It would depend on what the goal of our investment portfolio is. But then I would spread it out as I find the investment opportunities. So I know for example, when I bought Disney and that represented 100% of my investment portfolio, or even today with just 3 holdings, this is the percentage breakdown. Well, I'm okay with that because I know I'm not stopping there. In 1 year or 2 years or 5 or 10 years, well, I plan on having a well-rounded investment portfolio. So from my perspective, any overweighting in any one position is a temporary issue. So I'm less concerned about that. Now, with that being said, after the Intel purchase, well, I had started to try to save up a little bit of cash to add to the investment account. And once I put it all into Lockheed Martin. We got an average price of $336.15. So I think this stock is right around the same price as it was when I first bought it, maybe up $1 or $2, but probably about flat. So again, this is a long-term holding, so I'm not overly concerned with what it's doing right now. Now, one interesting situation that did come out of the purchase of Lockheed Martin is that I knew I wanted to buy it right after I had finished my research on the company. So I went ahead and made a video. Told everybody that I was going to buy it by the end of the following week, but Lockheed Martin actually pays a $2.60 dividend on a quarterly basis, and their ex-dividend date, by coincidence, was on the Friday that I purchased it. Now, I had gotten asked the question, do I want to buy it the day before the ex-dividend date or on or after the ex-dividend date? Now, if we buy it on or after the ex-dividend date, we are not eligible for the dividend, which I didn't mind since I was planning on holding all these investments for a very long period of time. So I'll be eligible for the next dividend in the next quarter, and I plan on reinvesting all those dividends anyways. So the reason I bought it on the X date and not before the X date so I could get the dividend is I didn't want to pay taxes on the dividend, and I figured that the stock price could move lower on the day after the ex-dividend. Now, the reason I thought on the day of the ex-dividend. Now, the reason that I thought the stock price would move lower is because the dividend does in fact get taken out of the price of the stock. Now, this doesn't necessarily mean the stock would be down, since it is very possible that normal trading, supply and demand of the market, moves the stock up on the ex-dividend date. But in between the ex-dividend date and the close of the previous day, the stock price, the dividend amount gets deducted from the stock price. Now, if you're curious about, I actually did a video about how that works, all about how dividends work and whether or not it can make sense to do something like the dividend capture strategy. So if you're curious to learn more about dividends, perhaps that could be a good next video for you to watch. I got a link right here. I got a link in the description below. And thank you so much for sticking with me all the way to the end of the video. I really appreciate it. Thank you, and I'll see you in the next video.